Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for the afternoon of Wednesday, the 24th of February, 2021. Well, you think GameStop's up a lot here at 91? What if I told you in the aftermarket it just hit $200? It's currently about 145, 150, but it's moving like a rocket ship one way and the other. And they're back. It's that simple. The Reddit boys, Kathy Wood, she's back. And they are just in this market, and people are just going bananas. AMC getting a lift. Now, I understand the AMC lift. Let me explain that one. Moderna came out after the market, and actually it was late in the day. And what I read is they're ready to test the South African variant. So they've shipped vaccines, they're gonna do the test. This opens their doors to monetize their vaccine product. They're getting to the point already where they're testing these variants, and it could come out where they say, well, if you want a better rate of protection, this is what you do. And given how this virus keeps mutating, sounds to me pretty interesting. THCX, well, that got a big bid as well, too. Now, as I said, I want to start covering some of the craziness in these markets every now and then. I am not a stockbroker. I am not going to ever tell you buy this or sell that. You're not going to get that from me here. Will I do that in the morning subscriber video? Not really. I'm going to stick with my SPDR ETFs. But I can point out here what we see. We had a market that went bananas, is that the right word? When the market left the $40 range, basically right here, and that was not far ago. That was December. Then it went all the way up dramatically near $500, fell back, fell into this area of the $40 range again, where it all started from, and the market started up. Now, as I said, you're looking at this at the close today. The market's in a buy mode, higher lows, higher highs, over the 18-day average of closes. Let me ask you one thing. What do we talk about could happen? I want to come back to this and see if I can get this to work with me. Here is an embedded reading. I don't care. Remember what we talked about if you take the charting course, you learn embedded's embedded. Stocks, no stocks. This is the market today. What did it do? It lost the embedded reading today. At the end of the day, this whole play that kept the bias down shifted. Now, the market is past the 18-day average, so it's saying this play is over. I don't know where it's going, but the upper Bollinger Band's 226 is probably something that's worth looking at. And obviously, a real whipsaw would happen if you get back under the $40 level. When we come over and we look at AMC, AMC is at least more normal. If there's such a word in these, I want to get over where I can get these to work with us. Here we go. A little more normal. Here is the market. You can see the arcing in the slow stochastic reading. It's embedded. This was Monday. This is Tuesday. This chart already had lifted itself out of its bearishness, had hit its upside target. I'm going to come back here. If you lose the embedded reading, I expect the 18-day average or the closest moving average to be hit. Now with today's action and the continuation, the next target, 1210. We'll see if we get up there. Again, what I like about this more than any of them, GameStop, I have no idea what's going on in GameStop. I can make an argument that if these variants come out and the COVID vaccine gets out enough, movie theaters, I think people will go back to them. I think you tire of your big screen in your home. You like the event with the Dolby sound and all that. I know I do. Can they make money? I have my doubt about it, but it's something. They're going to have to change their model as I see it. We then get to PAVE, and I have been telling you, and I started covering this one for you, and this ETF, because I believe that this was the one that, with infrastructure, is something that's got to be watched. You're at a new high now in this at this point. The trend has been up, higher lows, higher highs. So that's the first bullish part. The market has been over the 18-day average of closes. I think you'd agree with me on that. The bias is up, so where's the upside target? One of them could be the upper Bollinger Band. And if we step back here and we look at it, that's the first time the market has gotten up to that band. So what do I think the pros did today? Well, I think they stepped out. of part of their position, if not all of it. You have the embedded reading. And again, I think they'll start buying on the pullbacks in the market until that embedded reading is lost, driving the market to higher highs. Could they keep a trailing stop? Why not? That's what I teach in my charting course. So I think that's what they're going to do. I think they got out of a chunk today. It gives them buying power on the breaks, and we'll see where it can carry them. What about THCX? Was that the end of the correction? Could be. We don't know yet. The battleground's going to be the 18-day average. You have to get over on the current chart pattern, 2308, to break the pattern of lower highs, lower lows. I do not think the pros are going to sell it short at this 18-day average. And the reason I don't believe they're going to sell it short is you're oversold. Oversold, 18-day average, not that much interest on a lot of probably the computer programs and the pros that don't even use those and just look at the market. In SMH, I don't think the semiconductor problem's going away at all. In this morning's subscriber videos, I was covering this with the longer-term charts too. Lower highs, lower lows. I don't think you're going very far on the downside. I don't have a reason to do anything. If you look at the weekly chart, it's a much better picture on this. When we step over now and look at the energy sector, you just keep running to the upside. No change of anything. So we're going to see just what happens. We're at March 24th, at the February 24th, right at the beginning of March. The OPEC meeting takes place. What's it going to do? That's going to be the real question for everybody. As we step over to QQQ, yesterday was the day that I said I think the pros have to cover their shorts in my subscriber video if they were short. If they were short. Why? It's not that I'm analyzing the market. First challenge of Bollinger Bands, if I'm not a puppet saying that, you should slap me across the face. That's what I teach. That's what I believe. So the probability was that at that number, that's where the pros were going to take money off the table. I don't know if they went long. I don't see any reason to be long, but I don't know. I see a lot of resistance at 329.14. I wouldn't be surprised if you get some selling up there if the market gets that high. When we come to the emerging markets, notice it refuses to close under the 18-day average. Now, it had lost its embedded reading. It made a run, but it didn't quite get to that number. It got pretty darn close. To break the downtrend, you've got to get over 76.59. Any close under 75.30 is bearish now. So I can give you a number where I think the pros will jump in on the short side. It'll be a close under 75.30. Barring that, I just see neutrality in the market. As we step in together here at the GLD, this has still been in a bear play. Now, there is divergence. You have momentum sideways to higher. You've got the bias down. The trend is now down. Lower highs, lower lows. In my morning newsletter, and I do write newsletters twice a day for my futures traders, and that's the full subscribers, and they get to see just what I'm doing in there in terms of analysis. Any close over 170.14, in my opinion, throws out a buy signal that could carry the market there, and the reason why, okay? If that happened, you'd see on the chart higher lows, higher highs. I'm not telling you to buy this trade. I'm telling you what I said to them. At the same time, today's low would be the key. It's 167.15. So the risk, if you get long over that, is getting back under this number. And the hope, fingers crossed, is that the market would get a run. Are you bullish here? No. There's no setup that has occurred just yet. In the gold miners, I see a market that I had mentioned. I think the pros are covering shorts. I think the resistance is back at 34.30. As we take a look at the market right now, you can see that you're out of an oversold condition, just barely got out of it, but you're out of it. We also can take a look and see 32.54, and today's low in the market was 32.65. You've left a downtrend. Why? You now have a pattern of lower highs but higher lows. If you take out today's low of 32.65, then you throw away today as being that swing line low. It hasn't happened. As far as I'm concerned right now, this market went neutral today. As we take a look at TLT, well, the Fed had its day again today. Today was the second day, and Fed Chair Powell spoke before the House. I forgot the name of the committee. I think it was the Financial Committee. And he said more of what he said, but he elaborated today and talked about digital coin. And the Fed expects this year a very hard study, a good hard look at it. I will tell you this again, I'm going to say it. I don't think any of these other coins are anything other than spec vehicles temporarily. I think that when the real vehicle comes for use in these societies, it'll be run by the central banks because they're going to want to track them. As soon as you get rid of your Bitcoin and it comes in, I question down the road here, is the Fed going to in some way capture your name and say you didn't pay taxes on your whatever digital coins you have if you did not? I'm not saying you didn't, but I think it's somewhere along the line as this value of that gets higher and higher and higher, you've got to be watching it and saying, okay, there's a shadow market out there of billions of dollars. Got to be very careful here. Is the government going to come after that money? You know, they went after Swiss money. They go after everything at the end of the day. So wouldn't surprise me. But interest rates, nah, there's still been no sign. You know, this type of break, when you get it, ends ugly. Nobody rings a bell and you just get a big pop in the market. That will happen. But the Fed chair, he just held firm today. He would not get trapped into any of the questions, would give any more than he gave yesterday. And the market already knew that story. So interest rates continue down. They're not scared of the Fed stepping in to change anything right here. FXE, still liking what I am seeing in this market. We've got higher lows now, higher highs. So the trend turned up in this market. It is overbought. We'll see what gives. I just see the market sideways here. It's got to break out of this area in order to get very excited about it. But going home today, I would remove this arrow down. I'd have it pointing up, and unless you take out today's low, either on Thursday or Friday, the market's looking better and better, like the potential is there to challenge the upper Bollinger Band. So a wild day? Oh yeah, it was. And there's always something for everybody in these markets. So if you'd like to learn more and you'd like to keep up with what I do here, it's really simple. Just go to our website at www.iraepstein.com. My name, iraepstein.com. Go up to the word research. You can find out how you can subscribe, how you get to get the subscriber videos in the morning, what they do. I think you'll find it real interesting. I'm Ira. You have a good day.